Hello, Namaskar. Welcome you to this analysis. I am Chaman Nayak and here's my take. Tonight, I want to begin with a question. What does central bank do when inflation remains elevated, growth begins to slow, global uncertainty refuses to fade, and international capital become increasingly selective? Well, the answer, according to Reserve Bank of India, is not panic. It is preparation, and today's policy announcement was perhaps one of the clearest example of that philosophy. Beneath the headlines, beyond the numbers, behind the technical language of monetary policy, lies a much larger story. A story about confidence, a story about resilience, a story about how India is preparing for its increasingly unpredictable world. Let's begin with the data. Well, the RBI six-member Monetary Policy Committee unanimously voted to keep the policy rate unchanged at 5.25%. Not 5 members, all the 6 members voted to maintain the status quo. Well, this unanimity matters the most because it signals something market pay attention to. And what it pays? It pays to conviction, it pays to consensus, it pays to clarity. At a time when uncertainty dominates the global economic conversation, RBI wanted investors to hear one message loud and clear: India remains committed to stability. But if you think today's story is only about interest rate, you are only seeing the half picture. Well, the real headlines lies elsewhere. Well, the central bank announces series of measures specifically designed to attract foreign currency inflows and strengthen India's external buffers. Well, let's discuss about it. Now, let's take a pause and understand why that matters. Because history teaches us a simple lesson. Countries do not build economic shells during the crisis, they build them before the crisis arrive, and this is precisely what RBI is doing. Well, the central bank has taken steps to attract the overseas investors into Indian government bonds and equity market. Additional pathway have opened and participation have encouraged, and incentive have been aligned to Indian if that makes even more attractive destination from global capital. Well, here the question arises, why? Because in today's world, capital is constantly searching for the three things, and three things are: first is stability, second is return, and third is confidence. And RBI wants India to offer all the three. Well, now consider this backdrop. Well, global investors have spent last several years navigating rising interest rate, geopolitical conflicts, supply chain disruptions, banking sector concern, energy shocks, and slowing growth across major economies. Well, the money has become cautious, investment decisions has become harder, competition for the global settled price piece of data. RBI has revised its inflation forecast upward to 5.1% compared to earlier estimate of 4.6%, and that tells inflation risk have not disappeared. Far from it. Supply disruptions remains a concern, energy prices remains vulnerable to geopolitical development, and global uncertainty continue to create inflationary pressure across economies. Well, at the same time, RBI has lowered its growth from 6.6% to 6.9%. 0.3 of the percentage may appear very small, but in economic size of India, adjustment carries a significant implications. It reflects the reality of every major is confronting today. Growth is slowing, inflation remains uncomfortable, and the policymaker must walk a very narrow path between optimism and caution. Well, the balancing act explain why RBI neither chooses aggressive actions nor a dramatic intervention. Instead, it is choosing a strategic positioning, and perhaps that is the most important takeaway from the today's announcement. And the objective is not merely to attract dollars, the objective is to strengthen the Indian financial architect itself. Well, according to experts and market participation, these measures are expected to enhance the capital inflow, deepens the Indian's bond market, improve the liquidity conditions, and provide the support to Indian rupee. Think about it, why it means and why this matters. Well, a deepened bond market attracts more investors create liquidity, and the greater liquidity improves the efficiency. And the stronger financial markets even create a greater confidence, and it becomes a reinforcing cycle, and that cycle strengthens economic resilience for years to come. And that is what RBI is trying to achieve. Well, answer may be surprisingly simple. Well, the central bank is attempting to ensure when the global investors evaluate the opportunities and risking of coming, India remains impossible to ignore because the competition for the capital is no longer about regional, it is global, and every nation wants investment, every economy wants growth, and even market want confidence. And today's announcement was India's way of saying we are ready for the capital, we are ready for the strength, we are ready to depend the market, and we are ready to face any unconsequences. Well, in many ways, they are not merely a monetary policy decision, it was an economic statement of intent and the declaration that India intends to remain one of the most important growth stories of the 21st century, and perhaps brings us the question we started with. What does central bank do when inflation remains elevated, growth remains slow, and uncertainty dominates the economy? Well, the today's answer from the RBI was very clear. Your strength, your defenses, you reinforce confidence, you attract capital, and you prepare for tomorrow before the world begins to worry about. Because in the global economy, confidence is earned long before it is tested, and today's announcement was ultimately about preserving that confidence. Well, for the SAAR analysis, this is not just a story about monetary policy, it is a story about strategy and a story about India's ambition to stay stronger in an increasingly world. Well, I am Chaman Nayak. Thank you for watching, and until next time, keep looking beyond headlines because the real story lies deeper than the use. Thank you for today's analysis. I will be back with another episode. Till then, just worth this.